Hello and welcome to June 29th. The alpha is PG minus 13%. Let's go look at that chart. There it is. We have yet to break through the gantry, so we're still stopped at the 132.30, which is our initial stop based off this dipper low right here. And there's our 3-to-1 ratio target of 142.90. Anything can happen. We are just above the 50% retracement of entry and exit. We'll see what happens tomorrow. We have a nice. It is a spinning top, so there is possibilities because the tail's a little bit longer on the bottom than it is on the top. But that said, it's no guarantee of what's going to happen. We are running approximately $65 behind, which is not bad compared to other losses. I mean, you have to keep it in perspective sometimes, all the time actually. That is one contract. That said, for PG, let's go on now to Yelp. Yelp is at a minus 16, and here's Yelp. And 1, 2, 3, and there it is, right there. And also, Yelp is going through the same situation. They have yet to break clear of the gantry, EP entry price. Once that clears the entry price, we will be going here. Now, I am listening to a new book on Market Wizards. Let's go ahead and look at that. Here at Market Wizards, I'm now listening to this one. I'm listening to this Market Wizards, and it's an older book, and I think if I can find the publishing on it, there it is. Release date March 21st, 2013. An Audible. That's the Audible. Is not the original because they're talking about the markets of 1999. They didn't even talk about the .com break. But what's really very important about this mystery book of Market Wizards, Paul Tudor Jones, Richard Dennis. These two guys are like legends, people. And it's Sakota. He was another one that was big legend. Marty Schwartz. So there's some real legends. And the important part is not how old this information is, but how important it stands the amount of time. And again, we're back to the same issue. And that is this. The same issue is we got to keep our risk management tight. Now, this is a 3-to-1 ratio, so if we get stopped out, it'll be 1 ratio loss with the anticipation of getting 3 or better on the next possible trade. All right, while we're here, let's go ahead and knock out the stochastics. In the stochastics, we fell down to 8.2. We are definitely falling way behind the SPY at 14.7. And let's go ahead and bring up the SPY to show it. Oh, we're back here again. There it is, 17.7, 14.7 for SPY. All right, so that is the conclusion. Oh, today here at the conference, this conference here is IAM.org. We had a fabulous time. It is going again tomorrow, the second day, and definitely ran into some old people that I knew and met some new ones today. So there we are with the IMN conference. And what's really cool about this thing, it talks about the various trading landscape, and we're now focusing on family offices. So that said, let's go on back to our trading screen. Oh, I want to give a shout out to Madison. She worked for McKinney. I will have to get more details on that. I apologize. I rushed this because we're running late. But we'll talk more about this in the future. So back to trading, and here we are. So now our next situation is RCL. RCL is here, and RCL did not trigger. Let's zoom in and look at that. That order did not trigger. You see right there, there's our entry at $90, and it retreated, massively retreated. So what's going to happen is we're now going to cancel the order. We come to the gear, turn on show orders, apply, okay, there's the order, and now when you hit these X's, that will cancel. Make sure that you cancel the buy order. If you cancel the sell order, look what happens. The buy order still stays in place. You got to cancel the buy order and they'll take out the sell order automatically for you. So RCL is now been returned back to the lost leaders list, and we'll wait to see what comes up. So that is now scanner time. So let's go on to scanner time, and we'll go ahead and stretch our box out here on the scanner. And there we are. Now we're going to do a benchmark. Let's go ahead and benchmark off the Stochastic Strategy core. Remember, the Stochastic Strategy store has no directional bias outside of itself. The core is that the stochastics is rising, and a MACD is rising, and the RSI is in all agreements. That's the core of the Stochastic Strategy. So let's go ahead and run it, and we're going to run it to all symbols. No, let's do what we should run it to the account. Let's run it to the alphas and see if the alphas have anything happening. And they do. Look at this. We're going to have, we have, but because we are not on this strategy, that's the heartbreaker. Yeah. So let me go ahead and give you the markets. Well, we have an opportunity here, and we're going to have to, because it's so big, we're going to reduce the out. We're going to add an extra zero to the volume, and we're going to make it $10 shares, because here's why. Institution investors start looking seriously at stocks who have broken their $5 barrier and are heading to $10. And that's when they start looking for, recall, the majority of stocks, not in current history, but in past history, like Netflix back in 2004, 5, and 6, Netflix is running between $5 and $10. And then the institution started picking up on it, and then today's is history, excuse me. So here is the open market with a $10 to $500 zone and 200,000 in shares, and we have 34.53. The reason I'm running the open scanner is because of the fact is we're going to be going to the open scanner in the future of our accounts. And so we are going to be slightly abandoning the lost leaders list and focus on the market, because look at this, 89 million shares. Let's go take a peek at that. Come down, come over and send it to Red 1, which is linked to the chart of Red 1, and then we're going to, okay. Whoa, 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 whoa. Look at this. Talk about explosive. Now, let's you know what, let's go ahead and forget our lost leaders and let's look at this. The question is, would the scanner have found this trade? Would stochastics have discovered this trade before it exploded? And the answer is probably not. See, where's the rise? There's stochastics rising, RSI rising, MAC histogram rising. There's the stop right here, and the stop would have been stopped out right there. So this would have been stopped out. There is nothing that in our scanner books at this moment that would have shown this. The other one, yes, I can tell you there is a trade right here. This is what we call buying the dip. There's your dip. The entry would have been the high of the 3-candle collective. But unfortunately, you would have entered the trade up here at the top. So no matter what, this gap would have hurt you. Would have definitely, but here's the makeup. You would have gapped up, got paid way over the call price, and but at the end of the day, you would have. So we got entered here around $20 right there, and it jumped and it closed at 31. It's an $11 move. Your option would have exploded. You would have been overpaid, but you would have had it. Well, we're out of time, so let you give you a little peek of the list for the upside and the stochastic core strategy on the open market. And with that, we'll conclude today's report for PG -33 at Losers Become Winners. And I thank you very much for stopping by and checking it out.